Welcome to Tangent PropTech, where real estate meets innovation and goes a bit off script. I'm Edward Cohen, PropTech entrepreneur and your host, alongside my co-hosts and PropTech venture capitalists Jeffrey Berman and Zach Aarons. On this show, we bring on a guest who's shaping the future of real estate. We dive into housing innovation, climate tech, the future of work, and everything transforming our buildings and cities. And of course, we go on some tangents. If you work in real estate, PropTech, development, or if you're just obsessed with making buildings and cities better, this show is for you. Because sometimes the best real estate ideas start with a tangent. Hi, I'm Edward Cohen. Welcome to Tangent.
Hey there, this is Jeff Berman. It is another beautiful day in insert wherever you are.
Today on Tangent, we have Benjamin Kanner, co-founder and COO at 3V Infrastructure, accelerating access to electric vehicle charging in multifamily and beyond. Hi, Ben. Where does this podcast find you?
Hi, guys. Thanks for having me. So I'm in the Bay Area, California, specifically the East Bay, if people are familiar, but it is a cloudy day out here in the East Bay in not so sunny California today.
So let's get started. Right before you joined, I actually asked Ben about the new mayor, Daniel Lurie, which actually seems to be having the streets much safer and cleaner, anecdotally, from friends and tweets. Ben, is that something you've seen on your end?
I have, anecdotally as well. I don't live in San Francisco proper anymore, so I haven't really been following the specific politics, let's say, and also the societal changes. But yes, from just going there from time to time nowadays, it does seem to feel like things are on the up and up. So I think it is positive.
Fantastic. I don't know him, but I'm a big fan of his and what he's trying to do. And I think it's somewhat sad and probably an indictment on our society in some way that you have to have an heir with generational wealth come in and rescue the city from, I'm sure, well-meaning, but misplaced objective progressives. Hopefully he can make hay and then return power to the people as a benevolent king ought to.
Here.
Absolutely. I mean, it seems like the new SF mayor has taken a policy position on housing, crime, and the economy, and he wants to reduce not only homelessness by 50%, but also plans to reduce taxes in multifamily. So, it seems like pro housing, but enough about that. Ben, so what did you see at the intersection of real estate and electric vehicle that led you to launch 3V?
Yeah, absolutely. So 3V we are, for all intents and purposes, an infrastructure investor. We install, own, and operate level 2 EV chargers, primarily in multifamily right now. But I would say, our core focus is long dwell properties. We are very specific to level 2 charging. We do not touch level 3 at all. And again, we are looking at long dwell properties, meaning that places people spend a lot of time, right? So obviously where you live, multifamily is a major one, right? That is kind of, our core focus where we've started. We'd branch into hotels, hospitals, potentially other places where people spend long periods. For me, to back up a second, and I'll give you the whole story very quickly, but I actually started my career in commercial real estate. I worked for Deutsche Bank, actually specifically REEF, and we worked on a $4 billion value add real estate portfolio. Ended up going back to business school, said, hey, if I'm going to stay in business, obviously, and potentially stay in finance, I want to do something I can kind of feel good about. I ended up going and working for Rabobank in their renewable energy and infrastructure team, doing big wind, solar, biodigesters, things of that sort. This was kind of like the 2012 timeframe. Then I went and became an entrepreneur, and I was working in software. I was in San Francisco. I was in Silicon Valley, built 2 companies. And after exiting the last one, I was able to take a little bit of time off, still had to come back and work, and said, well, where do I want to spend my time? And I really was looking for that intersection between sustainability and commercial real estate, because I love commercial real estate as an asset class. And then I also wanted to get back to kind of those sustainability and, again, doing well by doing good, that whole mantra. I was looking at a lot of different stuff. There was so much going on in the sustainability and the climate space at that point in time. And it was really trying to really hone in on something. And I really just thought EVs were cool. I actually ended up going to talk to a friend from business school who had worked for EVgo for many years, was then at Uber running all of their electrification. And he's like, hey, dummy, there is this big intersection between commercial real estate and EVs. And I'm like, duh. And so, ended up in that space. And long story short, after spending some time at a OEM, I ended up coming and seeing that there was just a big gap in funding EV projects, right? I was in project finance before. This should be totally a project financeable investment. But the fact of the matter is we're just in a nascent market, and, project financiers are inherently risk averse. And so it's very hard for them to jump in with that type of capital into this type of market. Seeing that gap, having some connections in the space, it was very fortuitous in terms of, us going to raise money, us talking to the right investors, and we were able to attract the right capital in order to fund the installation of these projects. And so 3V was born a little less than 12 months ago, and, we've already got steel in the ground.
How many months ago was it born?
We formally incorporated, I believe, in May of last year. So a little bit less than 12 months ago, about 11 months ago.
And how many chargers have you installed so far?
Probably right around the 100 charger mark at this point in time. I think we're at like 17 properties or something along those lines, and a lot more in the pipeline. Hopefully by the end of the year, we're in the hundreds of properties.
So it's give or take 5 chargers per building. And you said level 2 chargers. So for our listeners, the difference between level 2 and level 3 is the current, obviously, AC versus DC, as well as the amount of charge time. A level 3 charger is going to charge your car much faster, but level 2 is significantly less expensive, as well as better suited, I would suspect, for longer park times. So I've got a few questions for you. So, okay, if you're in 17 buildings and you've got 5 or so chargers, what have you seen thus far? And I appreciate you guys are right at the beginning of your journey, so you might not have this data, but how many cars per, let's call it 100 apartments, are you finding EVs? Do you find that there's more demand than the 5 chargers you're getting, the 5 places you're getting? Are you seeing less demand? Like, how are you freaking out? This product's going to get 5. This is going to get 10. Is it a function of the amount of apartments? Is it just the apartment owner saying, yeah, I want 5, I want 10, I want 20?
No, it's definitely not the latter. Although they would try and, or ask, and this is a little bit of what's happened in the market before. We spend all of our time doing this. We spend all of our time thinking about EV charging. We spend all of our time thinking about utilization and EV penetration rates, kind of what you were alluding to. The way that we go about this, I would just say, to answer your question very specifically, I don't know off the top of my head, and each building is very different, right? Some might have great utilization, some might not as great utilization at this one specific point in time. That changes all the time. And one of our goals in this is to get a lot of chargers into these properties to gather a lot of data, because we want to understand what that utilization looks like. We want to understand what these cash flows look like, because ultimately we do want to make this a project financeable investment and bring those larger project finance type players into the space. That brings our cost of capital down, meaning the cost of every dollar we put in the ground is less expensive, better returns, all these different types of things. So, we're trying to help seed the market with exactly what you're alluding to, a lot of that data on utilization to show that these cash flows are actually predictable in some way, shape, or form. The way that we go about this, and again, we're basically, finance people. So we have very detailed underwriting models, and we look at super localized penetration data and actually EV registration data, which some of these apartment buildings are so big that it's actually just saying something on that apartment building, but it's hyper localized about a half-mile radius of the actual address. We'll make predictions even very early in our sales process once we get a property list from a potential client or a potential partner, and we'll run that through our models. We'll put all the data on top of it, and it'll say, hey, at this property, based on the EV registrations, based on the utilization that we predict over time, this is actually, we say it should be 5 chargers or it should be 10 chargers. But you're actually very, very correct that on average, it turns out to be about 5 chargers, I'd say, at a property. That could obviously differ very widely if you've got a property in, say, LA versus a property in, I don't know, pick somewhere else that's probably doesn't have as much EV penetration. But yeah, generally around, call it 4 to 6 chargers is probably on average what we see at these properties. Did that answer all your questions, or I could probably go deeper there? I can't.
Yeah, that was great. I've got a bunch more. Let's go.
Keep going. Fire them away.
Are you are you venture backed or are you financed in a different?
We do not have venture dollars behind us. Our main investors is a company called Greenbacker Capital, actually one of their growth funds called GDEV. They are infrastructure investors. So we are long-term capital. We are infrastructure capital. We have a patient capital and a long hold period. Our contracts are 10 to 12 years long, and we anticipate that they're going to extend much longer than that. We actually don't get paid back from a ground up development with no subsidies until 4 to 6 years. So this is not venture dollars. This is looking at probably more along the lines, I won't say specifically, but probably more along the lines of, call it value add real estate IRRs, as opposed to 10x multiples on every company that a venture firm invests in.
I'm already a fan because look, I was going to say, I think there's something like 100 EV charger companies that are active in the US. You've got ChargePoint, you've got Tesla, Electrify America, and they own like 53% of the market. I think ChargePoint alone is like 53% of the market. They're competing at that scale. When you are venture backed, means you're going to make a lot of bad decisions, which we've seen. Campbell has never invested in a EV charging company. We've looked at dozens. And we arguably have the best network in the space. We have 1 million multifamily units represented in our LP. So we're like the dream partner. But the challenge
we need to talk anyway. Even if you're not an investor, we should talk. We can help.
Sure, I'm happy to talk. But the challenge here is we only get a few bites of the apple with our LPs. And every time we looked at EV charging companies, there has been very little differentiation that we have been able to qualify or quantify. So my next question is, how do you differentiate? How do you compete in this playing field? Your capital source, by the way, is a competitive advantage for you. So that's excellent because you have the patient capital you do. But I'd love to hear, and I'm sure our millions of listeners, we're up to like millions of listeners now, would love to hear that as well.
Well, thank you. So I think we just need to kind of step back for a second. And there's a lot of different players in this space, right? And a lot of players have been trying to do the same stuff. And it's kind of like, as you very well know, the right capital for the right job. Venture returns are for software, maybe hardware companies. These are looking for those unicorns out there that are really going to, corner the market and are looking for those 10x returns. What we've been seeing in the marketplace is even on the software, hardware, call them OEMs, or software and hardware providers, there's starting to be a differentiation between who does the hardware, because those margins are being compressed significantly, and then who does the software, and those are becoming real software companies, and they're only focused on making the best network software out there. What's been convoluted in this industry, and I think been convoluted even in real estate, when you look at like OpCo versus PropCo or things of that sort, is it's a similar type of thing. People have been using venture dollars in order to finance the actual infrastructure. And that's where people have gotten sideways. This has happened with, Blink, with, I think there's, unfortunately even been some lawsuits and things around that. Even ChargePoint for a while was, really looking to sell hardware and software. But by virtue of that, they learned, hey, like a lot of people don't want to pay for this. If we could pay for it ourselves, then we're going to be able to sell a lot more hardware and software. Those have been generally done potentially with venture dollars. And again, as we've all just discussed, venture dollars are not the right type of capital for these type of infrastructure investments. So we are not a hardware or software provider. We have many partners, and we actually ran a 35 respondent RFI when we first started this company to see who the best software and hardware providers were out there that we want to put on our network. But truthfully, we have, kind of people that we like more and people that we like, not as much, and people that we may not work with. But at the end of the day, we are hardware and software agnostic. We are not the network provider. We do not build our own software. We partner with those companies. We want to have more than one software potentially on our network because, again, just from an investor's standpoint, we want to diversify that risk. And then from a hardware provider perspective as well, I mean, a lot of the hardware is coming out of now large OEMs that know how to build technology hardware. They might build TVs as well, but those margins are very small. And it's really becoming compressed in the EV space as well. So you have to have those large providers like the Zerovas, like the Light-Ons, like people like that in the marketplace that have been doing technology and hardware for many years and can deal with mass volumes at small margins. So we're starting to see that differentiation. And again, 3V as a company, our product is capital, right? That is what our product is. It's not about the hardware or software specifically.
So the competitive advantage is you're providing the infrastructure capital for the development of EV chargers at specific sites.
Correct. We are the capital provider. We are differentiating in the market, whereas we are just the capital provider, and our incentives are completely aligned.
So you want to be the partner to all these. You're not an EV charging company. You want to be the partner to all these EV charging companies. So in other words, anyone who's listening to this podcast that is an EV charging entrepreneur, you should be calling Ben, because Ben is going to provide the capital for you to do what you're supposed to do. And then you don't have to go get venture dollars.
Exactly. I should say we are going to be your customer. So anybody who has hardware or software out there in the marketplace, we're happy to take a look at it. And then we would be your customer. We would buy the hardware and software from you. We would have our partners that are the property owners, and the property owners, don't want to pay for this themselves, right? It's an amenity, but
so you still are compete. This is an interesting model. Everyone should pay attention here, because this was not straightforward to me. I'm old and senile, so it took me a beat. But there's two prongs to this, because the businesses that we looked at were all essentially, they're buying OEM hardware and they're trying to pitch directly to the multifamily and commercial owner operators. And they're saying, hey, listen, we've got venture dollars. We can pay for the installation, and we're going to do a rev share, whatever. What you're saying is you're agnostic to the hardware. So in other words, X company is using Y hardware out of X or Z state. They may be stuck in a single relationship. You've got relationships with a bunch. You're also creating relationships with the end user, the end operator, the operators of the properties. You can partner and compete. That's very interesting.
Yeah, I wouldn't even say we were competing though. I mean, really what we're doing is, if a hardware or software provider goes to a multifamily and they say, hey, this sounds great. We know that we need this amenity, but we don't have the capital, or we don't want to put in the capital to pay for this. We would be the ones who would come in and finance it. We would be the capital partner to the multifamily. We would essentially be investing in their property, putting infrastructure in to make their property more value, to drive more NOI by virtue of being able to attract better residents. And then we would be helping the technology provider sell more hardware or software, because again, they'd be saying, okay, great. Now we have a financing partner, Mr. Real Estate Owner. You don't need to pay for this. We've got 3V paying for this. And we would be buying that hardware and software from the technology provider. So we really are that middle layer. I mean, similar to even like financing a car, right? Like, you don't want to pay cash up front. Great. You go to a financing arm. A lot of these companies have their own financing arms. So maybe not a great, corollary, but you get the idea of, we are that financial provider for those folks that don't want to pony up the cash themselves.
We'll be right back after a quick break. This episode is brought to you by CREtech, one of the most valuable events I attend each year. It's happening October 21st and 22nd at the Javits Center in New York. Whether you're a real estate owner, operator, developer, or tenant, this is where the industry comes together to share ideas, to explore new tech, and build relationships that actually move the business forward. I've had the chance to grow real partnerships and discover solutions here that I probably wouldn't have come across otherwise. And this year, CREtech is rolling out something new for 2025 that I get to tell you about. It's called the Hosted Meetings Program, and it's designed for qualified real estate professionals, and it covers your full event pass plus up to $800 in travel and hotel costs. All they ask in return is that you take a few short, curated one-on-one meetings with tech companies that align with your business needs. It's a smart, low-pressure way to explore what's out there without the typical event costs. If your company owns or manages 1,000 residential units or 1 million square feet of commercial real estate, and you're involved in tech or operational decision-making, this is definitely worth checking out. You can learn more in the show notes and see if you qualify by reaching out to us at tangentcommunity@gmail.com. I'd love to help you get set up. User code PARTNERTANGENT20 for 20% off your ticket. See you at CREtech. Now, back to the show.
Really interesting. I have monopolized the conversation. Edward, I'm sorry.
I mean, I've been just missing your tangents, Jeff. Conversation was so focused today that I didn't even want to jump in. I love this. Ben, fascinating model indeed. A few questions. So on the multifamily side, walk us through how does a partnership work? How do you underwrite the multifamily operator? How much does it cost them eventually? Or how do you align incentives with the multifamily operator?
Yeah, absolutely. So, our model is again to come in and provide all the capital. This is truly a no-cost solution to a multifamily owner. So we come in, we like big portfolios because it allows us to diversify risk. And so, the bigger the portfolio, the better terms we can offer to that multifamily because it's not all about one property. It's about, spreading that risk across a larger portfolio and larger geographies. And we put in all the capital. We reimburse for electricity from day one. So we'll put in all the infrastructure. Generally, we go off of house power, but we can, do other things in certain situations. And then, the way that we make money is we take utilization risk. And this is specific to multifamily properties. We are really the only company out there that is institutionally backed that does this. There are some others that are kind of, onesie twosie or take onesie twosie opportunities, but we really are the only ones that can take down large portfolios. The only way that we make money is when a driver or a tenant actually charges at these electric vehicle stations. And that we find really aligns our incentives with the property owner. So again, this is an amenity that they want to have. They want this because it helps to bring in this group of tenants that they potentially wouldn't be able to attract otherwise. And by virtue of that, we want to make sure this amenity works all the time. We are completely aligned where this thing has to work. If it's not working, we're not making money. And so we want to make sure it's the best amenity possible. We also need to make sure that we're not gouging people. We cannot charge too much for the charging because otherwise people would go and charge other places. And then lastly, we actually, to your question earlier, Jeffrey, is, we need to monitor the utilization very closely. How much are these stations actually being utilized? Once we get to about 25 to 30% utilization, and you can think of this as there's 24 hours in a day, 8 hours, somebody's charging all night, every night, we need to drop more chargers in. We need to make sure there's enough chargers because otherwise it's a bad tenant experience also. And so again, we're not only the capital provider, but we're really that trusted advisor to these property owners because again, we're thinking about EV charging all the time. And truthfully, there's a lot of nuances to this. And it's not just a set it and forget it. Like you drop a few chargers and then you don't have to think about it. As utilization increases, as there's more EV penetration, you got to put more chargers in, right? So it's something that you do have to be monitoring and making sure that it's working, you're charging the right amount and also you have the right number of chargers.
How long does it take to deploy these chargers? And, if they deploy 5 and they are overutilized or they need more, how fast can they upgrade? I guess you'll figure that out, but how is it working now?
Like with all construction, it's about, the permitting process in specific jurisdictions. But if it's just rip and replacing, meaning like you've got some old chargers there, maybe they're working, maybe they're not, maybe you're not charging. This has been a big factor for some of the large portfolios. A lot of portfolios have been thinking about charging kind of at the property level. Different property managers have just been putting them in. And then all of a sudden corporate realizes, oh, we've got all this, all these chargers out there. Maybe they're charging for charging, maybe they're not, right? And one of our clients, massive multifamily portfolio, they realized they were giving away about $500,000 of energy across their portfolio per year. So anyway, we'll come in, pull those out, put in new chargers. That could be 2 weeks, right? That could be very quick. You don't need permits necessarily for that in most cases. If you have to go through a permitting process, it's probably somewhere between 1 to call it 6 months before we can get chargers in the ground. But, actually putting chargers in, especially level 2 chargers, it's not that complicated. It's not like the DC chargers. I mean, these things cost us somewhere between probably $6,000 to $10,000 on a per port basis. Again, it's not about any one charger or any one property. It's really about the scale across the portfolios. And even a lot of real estate players are like, well, I'm a smart real estate guy. Why wouldn't I invest in this? And it's like, you absolutely could. But, again, it's not going to be this huge money-making enterprise for you, just the charging revenue or even the profit share of the charging revenue. It's really about that scalability. And the way that our investors get excited about this is it's not even about Camden or Bridge Investment Group, some of our clients that are massive, it's about aggregating these all together and getting not, hundreds of properties or thousands of chargers, but thousands of properties and tens of thousands of dollars where you really get that scale. And again, it's a very long-term investment horizon that we're looking at.
Now that you mentioned Camden Property Trust and Bridge Investment, talk to us about those, how did those deals come together?
Yeah, I mean, so Camden was one of our first clients. Truthfully, we had pre-existing relationships with those folks, but really, I mean, that came together, and Camden, is a very high-end, all Class A apartment buildings across the country in some of the best geographies, right? They're the top 50 metros. These are where people need EV drivers. And I'd say, what we've seen in the marketplace over the last, call it 12 months, or I'd say about 12 months ago, you start to see this kind of tipping point where it was no longer, multifamily folks were like, oh, hey, this is nice to have. I'm interested in this. Maybe we've got a few chargers here and there. It was really more about like, people are coming into our leasing office. They drive EVs. And if we don't have EV chargers on the property, they're not renting from us. If you think about it, 80% of EV drivers look to charge at home where they live, right? What we're kind of seeing in the marketplace is when you have an EV, the way that you fuel your vehicle has changed, right? It's no longer really the gas station model. What you want to do is you want to do it exactly like you plug in your phone, right? You want to do it next to your bed while you sleep, right? For those 30% of Americans that are living in multifamily, they don't have the opportunity to do that themselves, right? I live in a single family residence. I've got a charger in my garage. I installed it. So if they do have an EV, the easiest way for them to charge is overnight where they live. So they're really demanding that if they are renting in a multifamily type setting.
This is something that, it's been said, but you're confirming it here. Electric vehicle charging at home or at multifamily, it's gone from an amenity to an expectation. So are we officially past that tipping point where EV charging is a leasing differentiator and it's more of a requirement, would you say, for especially a lot of these garden style communities?
I'd say that it is. I mean, can I ask, do either of you guys drive EVs?
In Costa Rica, I do. In New York City, I have no need, but in Costa Rica, I mean, the EV craze is insane.
I have a stand-up scooter that's electric.
There you go. Well, where would you prefer to go to somewhere to charge that, or would you prefer to plug it in your garage?
At my garage, certainly.
There you go. Yeah, so similar, right? So, I don't know, Edward, if they're there. What I would say is, we've seen 10% even in first quarter, year over year increase in the amount of EV sales. Cox Automotive said that through the rest of 2025, 25% of car sales are going to be EVs. That sounds a little aggressive to me, I must say, but let's say we're somewhere between, 7.5%, which was the end of 2024, and 25% at the end of 2025. So somewhere in there. So that means that percentage, call it, 15%, let's just say, that's 15% of people out there in the world that could potentially lease multifamily from you are not going to lease at your apartment building unless you have a charger, right? They're going to come to the leasing office and say, I could lease here, or I could lease across the street, and I know I have chargers there. I can charge my car there overnight. So it really becomes that opportunity cost. And I think we're at the place where enough multifamily are starting to have it, where it is something that is going to be demanded. I mean, even if you go to a hotel now, there's a button on Marriott app where you can say, hey, I want EV chargers at the hotel where I'm staying overnight.
Because we're in the middle of officially what it is, a trade war, global tensions rising. Is this something that multifamily operators should be paying attention to when it comes to, how they think about their EV charging strategy?
I mean, I think absolutely. Let's put aside for a second, just in terms of getting things into the country. At the end of the day, I think that all of our expenses are going to go up. All of our, cost of living is potentially going to go up, inflation, whatever is going to happen. The general population is looking to bring down their expenses. EVs are cheaper. Like that is how it is. And especially the number of, cheaper vehicles that are coming into the market. Also, there's going to be a flood in the near future of secondhand EVs. Kind of that first gen are going to start to come onto the secondary market. And so that's going to be a big driver, I think, to more people adopting EVs. So that all being said, EVs are coming. And being able to attract those people to your properties. The cost of capital is going up for a lot of these multifamily and a lot of these property owners. So if you don't want to spend your money on attracting these people with putting in this amenity and putting capital towards this amenity yourselves, come to talk to somebody like 3V. We are that capital provider and we can get you that amenity, and that'll help to maintain your NOI at these properties. In terms of the actual chargers coming into the country, I'm not so worried about that, right? I mean, or the tariffs around the technology coming into the country. We'll see how that all shakes out, but there's a lot of onshore production as well, and so that's not as big of a factor. If you're talking about more the car space in general, that's not necessarily my focus. I'm not quite sure about how these manufacturers are going to deal with it, but they've already been onshoring a tremendous amount of battery production and things of that sort. I think it's maybe the raw materials that are going to start to become more scarce, but these guys have been planning for stuff like this, and I'm assuming these are much smarter than me, and when it comes to supply chain, so I'll leave it to them.
The question is if they're smarter and better than, say, BYD or Jack, or I mean, not only in Costa Rica, but the entire Latin America has been flooded with high quality Chinese electric vehicles, and like they don't have the brand recognition or the history that the Americans, or of course the Europeans and Japanese have, even the Koreans when it comes to automaking. But I mean, that day probably won't happen ever, but if the US ever allows Chinese electric vehicles in the country, it will be the end of probably the US automaker, because they're just much cheaper, full extras every car. Like, there's a lot that goes on into why the cost is different. It's just unbelievable to see how, you could get full extras electric vehicle with a, 400 kilometer, I guess, 200 something mile range electric vehicle for a fourth of the price.
I agree with you. What we have to remember, though, and everything you said is absolutely true. You guys should try it. I must say, no matter the make and model, I do find that the EV driving experience is just that much better, regardless of anything else, any other factors, climate, whoever cares, politics, whatever. Consumer sentiment is going to go after what's the best product. We do have to remember that we do live in a global economy still, and all of these companies function globally, right? And so they're not only competing in the US markets, they're competing with these other players in Europe and all these other places. And so, GM, Chevy, the American companies, they got it handed to them in the 80s when the Japanese came out with such better vehicles at a cheaper price. And I don't think they're going to let that happen to them again. So they're already competing on the world stage with these other companies. And I think it's just a matter of time before they start, bringing those models to the United States as well.
I want a BYD car. They are so cool.
You want one? I would love
just
one.
not be able to talk at all of them because all that thing is going back to China. But man, they built some dope cars.
Small price to pay. I mean, even I know Honda, I think, is bringing an EV to the US in 2026 that's less than 30K. These things are coming to the US. They're being forced to develop them globally. And, I think it's just a matter of time.
So much to talk about. Also, running out of time here, I wanted to ask you about just, the wave of not only transit-oriented development, but cities, some cities getting rid of parking requirement minimums. How do you see that impacting EV charging? Or do you see that if buildings will have fewer parking spaces, then they'll at least be dedicated for EV vehicles, or those are just not the right targets for EV charging?
It's a great question. I don't have a great answer for you. I mean, even today when we underwrite portfolios, we see a lot of buildings in cities that have less parking spots than they do units, right? So it's something that we take into consideration when we're underwriting each and every property. I mean, we look at each and every property very specifically. I don't know how, for instance, the New York, tax that they have entering Manhattan, or London similarly. I don't know how that's going to impact things. I think that's a bigger societal question mark. How quickly that expands throughout other geographies, to be determined. We love suburban places because people drive more. Again, it's us looking at each market and each building separately.
And there's plenty of that in the US and all around the world. Ben, last but not least, collaboration superpower. If you could choose one person, historic or living, to do a partnership with, who would it be?
I thought about this a lot, and the person I'm gonna say is actually not somebody who I necessarily. Well, it might be a little bit different. So Bill Campbell. So Bill Campbell was the executive coach of, many of the great Silicon Valley entrepreneurs. I'm always looking to grow in my career. I'm always looking to get better. And so, unfortunately, he's passed away. But if I were able to work with somebody like him from a professional growth perspective, I mean, it's invaluable, right? So, I don't know the number of partnerships I could do with actually, that's making cash money if I had, a coach like him or other that I could continue to grow my career professionally with.
Bill Campbell. I mean, he was also the VP of marketing and board director of Apple. And he coached none other than Larry Page, Sergey Brin, Eric Schmidt, Sundar Pichai, Steve Jobs, Jeff Bezos, Jack Dorsey. Did they all just have one coach? What's going on here? That's wild. Wow. And Ben Canner, if only.
If only.
Thank you for sharing. Jeff, who is your collaboration superpower today? And you cannot say Howard Lutnick again.
Howard Lutnick.
Howard, if you're tuning in.
Yeah, forever. As long until Trump fires him, he's number one.
The 24 hours.
He will get fired.
24 to 48 hours. Maybe we'll have Howard as a guest soon. Who knows? Not like he has anything better to do.
Exactly. No, in all honesty, I've been thinking about this. Someone I consider a mentor, even though I don't know that he would consider me his mentee, is Noel Fenton from Trinity. I had the honor of serving with him on a board, and the man is a goddamn legend. And first of all, not only did he sire multiple killers himself, like Peter Fenton from Benchmark, but he crafts excellence. He's like the jokes that people make about Chuck Norris, and he eats a bunch of pencils and then shits masterpieces. That's Noel Fenton. And I was thinking about this in context of some portfolio companies of mine that were going through some challenges. And I wish that, and I actually have a relationship with him that I can call him up. But if I could actually collaborate with him and have him on the board of another portfolio company, that would just be creme de la creme, better than Howard Lutnick. So that's my answer.
Wonderful answer. Better than Howard. Ben, thank you so much for coming to Tangent today and sharing your background, your wisdom, and your vision with us. Where can Tangent listeners and multifamily owner and operators listening learn more about 3V infrastructure and connect with you?
Go on over to 3vinfrastructure.com. You can go to Bkanner, BKANNER at 3vinfrastructure.com. Drop me a note. I'd love to hear from everybody, and thank you for having me.
Muchas gracias, and thank you for listening to this episode of Tangent PropTech. If you learned something new or enjoyed the conversation, text a friend the link to this episode right now. Make sure to follow the show wherever it is that you're listening so that you never miss an episode. Tangent PropTech is co-hosted by me, Edward Cohen, along with Jeffrey Berman and Zach Aarons. You can find links, resources, and ways to connect with us in the show notes, or reach out anytime at tangentcommunity@gmail.com or on LinkedIn. We love interview suggestions, topic ideas, or just a friendly hello. If you're building something impactful in real estate or tech and want to reach our audience of decision makers, investors, and operators, email us. Again, that's tangentcommunity@gmail.com. We'll catch you next time, and remember, the best PropTech ideas usually start with a tangent.